All right, let's dive in. Today, we're going to pull back the curtain and look past all those simple lines you see on a chart. We're going to get to the heart of what really moves the market. We're talking about a way to literally see the footprints of the big players, the institutions, and pinpoint where they're actually buying and selling. But first, let me ask you something that probably hits close to home. Why is it that so many traders seem to miss those huge, game-changing moves in the market? Well, the answer, believe it or not, often comes down to the most common tool they're using, a tool that, as we're about to see, isn't telling the whole story. So, let's talk about the big one, support and resistance. For decades, this has been the absolute go-to for pretty much everyone. But here's the thing. What if it's kind of the old way of doing things? What if it has some serious built-in flaws that are holding you back? Now, the idea itself is super simple, right? Support is like a floor. Price is falling, it hits this level, and it tends to bounce. Resistance is the total opposite. It's a ceiling. Price is rising, it hits this level, and it gets stopped in its tracks. So traders, they just draw these lines and wait. They wait to see if it'll bounce or break. And this right here gets to the absolute core of the problem. You see, the old way, with support and resistance, makes you think in terms of these razor-thin, precise lines. But the market? Come on, it's almost never that clean. The new way, the supply and demand way, gets you thinking in zones, entire areas that are just packed with unfilled orders from the big institutions. It's not just a tweak, it's a complete upgrade. And this is why so many traders get frustrated. How many times have you seen the price turn around just before it gets to your line and you miss the whole trade? It's maddening. Or you're relying on indicators that are always, one step behind because they're based on old news. It just creates so much uncertainty. So if thinking in lines is the problem, what's the solution? The solution, it turns out, is a really basic economic idea that runs everything, from the price of avocados at your grocery store to the stock market. It's called imbalance. And this is the real engine that drives every single major move. So here's the key takeaway. Big, explosive price moves? They don't happen when things are calm and balanced. Nope. They happen when supply and demand get completely out of whack. When one side totally overpowers the other, the price has no choice but to move, and move fast, to find a new point of balance. Our entire job is to find those exact moments. Let's make this ridiculously simple. Think about apples. If farmers have an amazing harvest and suddenly there are way too many apples everywhere, what happens? They've got to drop the price to get rid of them, right? That's high supply. Now flip that. It's the end of the season. There are hardly any apples left. Now the sellers can charge a premium. That's low supply. The financial markets? They work on that exact same principle. It's that simple. And this really just sums it all up. The market has a natural rhythm. It goes from these quiet, balanced periods to these explosive, imbalanced moves, and then back again. We just want to be there right when it's about to shift from balance to imbalance. That's the sweet spot. Okay, so we know we're hunting for these big imbalances. Well, the best part is they leave behind these obvious footprints right there on the chart. So now let's get into the fun part, how to actually spot these zones. We basically find these zones in two main flavors. You've got your reversal patterns, which are exactly what they sound like. They signal that the whole trend is about to turn around. And then you have continuation patterns, which are more like a quick pit stop, where the trend just catches its breath before continuing on its way. And spotting a zone is actually a really simple 3-step process. Seriously. Step 1, find the current price on your chart and just look to the left. Step 2, look for a huge, explosive move. You know those big, long candles that scream that either buyers or sellers won in a landslide? And step 3, just trace that big move back to where it started. You'll see this little sidewise area right before the explosion. That's your base. That's your zone. Bingo. Now, this next part is absolutely crucial. This is what separates the pros from the amateurs. See, amateurs, they might find a bunch of these zones and just try to trade all of them. But a professional knows that not all zones are created equal. They have a system for filtering out the weak ones and focusing only on the highest probability setups. And the way they do this is with a cool concept called odd enhancers. Just think of it like a checklist or a scorecard for each zone. So instead of trading based on a gut feeling, you're actually analyzing a few key factors to see how strong the zone really is. It's all about stacking the odds in your favor. So here's a quick peek at what that looks like. A pro would look at a zone and ask a few simple questions. Like, how strong was the move away from the zone? Did price just rocket out of there, or did it kind of meander away? How much time did it spend at the base? The less time, the better. That signals a bigger imbalance. And maybe most important of all, is the zone fresh? Meaning, has price already come back to visit it? Because an untouched zone, that's where the real potential is. So when you start to put all of this together, what's the really big takeaway here? Well, it's a complete shift, a fundamental change in how you even look at a price chart. At the end of the day, this whole thing isn't really about drawing lines or using fancy indicators. It's about understanding the raw, basic forces of supply and demand. And when you learn to identify these zones, you're not just trading some random pattern. You are literally following the footprints left behind by the smart money, the big institutions that actually move the market. So I'll just leave you with this one thought. Now that you know how to see these zones of imbalance, these footprints of smart money, are you ever going to be able to look at a price chart this same way again?